Yeah, good evening, friend. And on behalf of the Accounting Standard Board of Institute of Chartered Accountant of India, I, Vinay Jain, as the moderator, welcome you all to this second day of the webinar on the non-profit organizations on technical guide has been issued by the ASB. This is indeed a pleasure to give my introductory remarks, yet it is always a pleasure to hear it from the chairman, who in absentia, Chairman CA Pramod Jainji, and the Vice Chairman, CA Abhish Hazardi. In absentia, I'm just introducing White so because they are right now at a place where they are unable to connect with us. So if any possibility will arise, and they will join us, friends. So welcome you all, but at the outset, and it's my pleasure to introduce you to two of our eminent panelists who are the expert into the field of the NPO. And the uniformity can be maintained when we have some guidance force behind us, and the guidance force behind us is our institute. And while discussing about the accounting, it is the Accounting Standard Board which helps us in taking the uniformity in presentation of the financial statement. So friends, with these introductory remarks, but one thing which I had interjected in between also yesterday, it becomes my duty to make it clear to each one of us that this Accounting Standard Board publication, which is there right now with us, is the technical guide on NPOs accounting and the statements, final statement, is limiting to the point that how we have to prepare our financial statement. So we should not get confused with the requirement as to the income tax. So income tax requirement may be different than what the requirement of the at the time of preparation of the final statements are there. So we should not mix two, because those are independent, because sometimes the accounting standards, because in the income tax, as we know, the accounting standards are different than what the accounting standards out there in the, even by the Companies Act, or by accounting standard has been prescribed by the ICAI. So we prepare our financial statements as per the accounting standard as prescribed and approved by our ICAI, and approved by the different outside authority, including the government authorities. So what we discussed yesterday and what we are discussing today, and what we are elaborating, will be taking the benefit of our professional and eminent experts, are on the pretext that this is limiting to the point of the preparation of the financial statement. So that's the point it becomes my duty to make it very clear to each and every one of us. That's how we have to prepare our financial statement. If anything more is required, if any for the purpose of other act, including the Income Tax Act, then what we have to do, we have to make a reconciliations out there. We have to make, as we do in our computation of income at the time of filing the income tax return, and many other ways, like where you have to prepare a reconciliation of multiple ways. So equally, we have to make that exercise at the time of making compliance to the other acts and the third party outside the ambit of this financial statement has been prepared through the accounting standard compliance. So with these introductory remarks, once again, I welcome you all friends who are joined in large number, and along with I welcome our eminent experts, Sri Ravi Kanji and Sri Mithulji. So I straightforward. I just start with this introductory remarks. I'll start with the session. Today's session, friends. Yesterday the session was first we had started with the introductory, and so we were followed by the balance sheet. The small portion of the balance sheet we left over yesterday because of the paucity of time. We'll be covering that also. But today we thought first let's take you through the points of the income and expenditure. See, at the time of while we are preparing our accounts on the basis of accrual accounting, the word income and expenditure becomes the honest and the very important. So we need to understand this receipt and payment and income and expenditure are two independent terminology. We need to understand. We'll be understanding from our experts on this particular point also. So friends, we'll be understanding the income and expenditure, how we'll be preparing, and how the requirements are there, what more specific requirements are there, and in a change scenario, within change technical guide has been issued by the Accounting Standard Board. So friends, with these opening words, I now request, straightforward, I'm going with my question. Mithulji, I'll take this opportunity to start with you first today. Yesterday, I mean, instantly the session was started with Ravi Kanji, so I have to balance it between the two. So because it's my duty to balance between the two, so I'll be starting today with you. So Mithulji, my simple question is because see what happened is that the size of the NPOs are always different because every NPO cannot be of the same size. So some are small, some are medium, some are large, some are more than large, rather, I should say. And then the compliance, as per the compliance requirement is concerned, we had read across that the institute has bifurcated these NPOs in level 2, 3, 1, 2, 3, 4, 5, something in multiple levels.
Yes.
So may I request you to please give us a broad outlook onto the criteria for classification of these NPOs in level 1, 2, 3, 4. And if that is, it will be definitely be helpful for the members at large to understand because they have to make a compliance. Because and the technical guide, it is required that what sort of a compliance will be there with these levels. Over to Mithulji, please.
Sir, thank you so much. And I welcome, along with you, I also welcome each one of the participants who are there in the webinar. And Vinay sir, thank you so much for giving us this opportunity to be here on the second day of Do You Know series on NPOs. Now, sir, coming on to your question, it's a very important question because that's where what happens that sometimes we go wrong. Now, the classification of NPOs in the categories that has been prescribed by ICI, okay, is very critical because that would determine the regulatory reporting, the books of accounts that needs to maintained, okay. Lastly, the applicability of accounting standard, because you see that once you categorize a particular NPO, okay, the institute has also given some exemption, okay, in terms of applicability of few standards. Now, before I answer this question, sir, I would like to present my screen just to because it requires some amount of numbering, okay, in terms of how the criteria has been defined. I would take the opportunity to present my screen so that the audience who are going through this question are more clear in their understanding. May I, sir?
Yeah, please go ahead.
Thank you, sir. Yeah, I hope audience, everyone are able to view my screen.
Not yet, please.
Okay.
Yeah, now it is there. Please go ahead.
Yeah, because of the problem I'm facing, I'll be a little slow in typing. Yeah.
Yeah, please.
So, as part of the technical guidance, okay, on NPO by ICAI, okay, we have 4 levels: level 1, level 2, level 3, level 4. Okay. Now, these level, if you see, have been categorized as large size, medium size, small size, and micro size. Okay. And these are the 4 levels that has been categorized by ICI for classification of NPOs. Now, if you see, very importantly, on the large size, you have, if I just break this a bit, in the large size, you have all the listed. Now, friends, specifically, this applies to all those non-corporate entities. Okay. Now, this categorization is not only limited to NPOs, but also to all other non-corporate entities. So it says all those entities which are listed or in the process of getting listed.
So there's small introduction. Is it applied to the all non-corporates or the corporate entities?
The non-corporate entities. So as part of the technical guidance that we are referring to, okay, it applies to the non-corporate entity or in the process of listed, both in fact, the equity and the debt. Okay. Now, this is one simple rule that if it is listed or in the process of listing, it is large size. All the banks, NBFCs, basically financial institutions, are also as part of this level 1. Now, I'll just say etc. because there are also insurance companies. Now comes is the revenue or gross asset. Okay. Now this excludes other income. Now this has to be more than 250 crores. Okay. Now if my revenue is more than 250 crores, I'm automatically a large size NPO. Then comes your borrowings. Now borrowings, if it is more than 50 crores, more than 50 crores, okay. Again, it's a large size. The last point you have is basically all those holding and subsidiaries falling for this or under this group, okay. So even they will be part of the large size categorization. Now, if I go to the next level, in the next level, among all this, the applicability will be revolving around these criteria. Okay. Now the condition is like this: if any of this point is getting met, automatically you are falling under that umbrella. Okay. Now here, this becomes from 250 crores, the revenue goes below, or if it is more than 50 crores and less than 250 crores. Okay. Your borrowing becomes more than 10 crores and less than 50 crores. Okay. Then comes your small size company. Again, here I'll just have this criteria: more than 10 crores and less than 50 crores. Okay. Now for borrowings, it becomes more than 2 crores and less than 10 crores. Okay. Now, level 4, all other entities or non-corporate entities or NPO, which are not covered in any of the levels above. Now, this is the categorization of NPO that we would have to follow if in case we are going ahead with the technical guide on NPOs. Okay. Now, this is one guidance that has come on the technique from ICAI. Okay. During, if I remember, during 2018 or so, there was also some MCA notification. Now, again, that had some other applicability criteria for those NPOs or non-profit organization. Those were registered under the Societies Act or Trust Act. Okay. Having said that, okay, so in the context that we are currently covering, it is important us to note what ICAI has demonstrated through the technical guidance. So we are not getting into that piece of discussion. However, we are restricting ourselves to the technical guidance that has been published by ICAI. And based on that, these are the 4 levels on which an NPO will be categorized. Over to you, sir.
Yeah, thank you very much. It's absolutely nicely presented and explained. And mythology is absolutely quite everybody can understand now, because since you had very much you had duty to the members that how they will be looking at to the level 1, 2, and 3, 4. Because the why it's so required is there's the compliances are friends in the technical guide. Once you go through with that, the last pages of the technical guide, you will come to know that what amount of the compliance is required with the, each level of NPOs. So that will make you easy to understand the lesser or the more compliances to the AS and other requirements. So with these words, thank you, Mithulji. So Raviji.
Thank you, sir.
Yes, sir. Sir, can you take away this screen?
Yeah, sure, sir. I'll
Thank you.
Stop sharing this.
Fair enough. Thank you very much.
Thank you.
Raviji, this always the point comes is sometimes we when we prepare the financial statement, there are 2 points which comes to our mind is see the purpose of this preparing the financial statement. why it is so considered essential? Specifically, the general purpose financial statement, why it is so considered so essential? And then the next question comes is primarily who are the beneficiary and who are the targeted user for this financial statement, which are general in nature. Please.
Yeah, thank you, sir. Thanks for the opportunity to, I mean, for the opportunity given by ASB and the team. Sir, to the question, to answer the question, general purpose financial statement, that is basically the financial statement which will be having a common information needs. I mean, that will be satisfying the common information needs of the wide range of users, basically. The users, in the sense, I mean, in general, not with respect to NPO alone. If you say the equity shareholders, that is the investors, you say from the NPO point of view, the I mean donors or founders, you can say, and the government angle, there are the other users and the suppliers, maybe the next users, and even employees also, because I mean their ESOPs and etc. may be linked to the performance of the company and etc. So the wide range of users are there. The information what we are giving is not for one specific person or not for one specific purpose. Okay, and this is a common information which is useful for many people at large. Then we say this is general purpose financial statement, sir.
Yeah, it is really, I mean, friends, for the benefit of the members, say idea is a general purpose which is general in nature for the user of ultimately for the benefit of everyone. But then there are other criteria. Definitely, the one question comes to everybody's mind is what is the special purpose then? Special purpose is which is meant for specifically, like which is supposed for restricted or the designated fund, which has been meant and specifically been asked to be used for specific that purpose only. Am I right, Ravi?
Yes, sir. Yes, sir. When a donor, obviously they will be asking for specific. I mean, when donor has donated some specific amount, obviously he'll be interested to know how that has been spent. I mean, utilized by the NPO. So then he'll be asking for the financials. So we are preparing as per the requirement, as per the contract, as agreed upon already. That is going to be special purpose financial statements. And this technical guide, whatever is there, is meant for basically general purpose, but it will not serve the purpose of specific.
Fair enough. But one thing, friends, which is we need to understand is that at the time of making a disclosure in the financial statement, either in the balance sheet or the income expenditure account, we need to understand if the funds has come for a specific fund, then the disclosure has to be accordingly. And if it is not specific, then the disclosure has to come in general disclosure.
Yeah.
Is that clear, sir? Is that I'm right?
Yes, sir. Yes, sir. Yes, sir.
Sir, Ravi is just saying back. I mean, there's a question always like in the Companies Act, we had seen and now there is a requirement as to the non-corporate to commercial entity also. There is a question of rounding off. So my always comes a point is the rounding off will be done in the NPO case also. This is the first point, like we need to understand. I'm just completing my question, maybe in a bit elaborate way, Raviji. Is the idea is the rounding off is mandatory in the case of NPOs, and if yes, for example, it's mandatory, then how the rounding off will help the beneficiary or the donor? This is one part of the question. And the second part, consequently, I mean, going with the same question, like if I extend a bit on this question, is the idea is that the rounding off criteria is based on to the gross income side, or is it general like rounding off has to be done in any case, as in the case of the corporate sector?
Yeah, see, in case of corporate, that is as per the Schedule 3, that is Division 1, 2, 3, whatever the scenario. That is first rounding off is mandatory, sir, in case of NPO also, in case of non-corporates also. I mean to say here NPO in the given circumstance. It is not optional, like whichever the rounding of whatever you wanted to do. But one point will be there, like say, so if your gross income is less than 100 crore rupees, they have given some option. Like you can round it off like within hundreds, thousands, lakhs, or this is your choice. But you cannot present it in rupees. Right. So in the same way, if the gross income is equal to or more than 100 crore rupees, then it should be to the nearest of lakhs. So its starting space is lakhs, millions, crores, and it will go on. So, but you're not supposed to do it in hundreds, thousands. That is what. So, and to confirm it, I mean, it is mandatory, sir, from the corporate and NPV, both the angle. It is not a choice.
See, this mandatory requirement is as per the technical guide, or it is somewhere else, like, sir? I mean, is the technical guides requires us to make it a rounding off?
Yeah, technical guide very clearly mentions that.
Okay, fine. So, friends, it is the requirement of the technical guide, and as published by the Accounting Standard Board, this rounding off, they said is the mandatory. So be careful, like yet just go through with it. What sort of a rounding off is there? Is a detailed elaboration out there in the Accounting Standard. See, in technical guide is there. So Mithulji, now the question, what we had started with our this deliberation and this webinar. We started with the yesterday we started with the balance sheet, but today we are started with the one terminology is the income and expenditure.
Yes, sir.
So always it comes to the point like we need to understand. See, in the case of NPO, what is the income, what is the expenditure like? It is always sometimes it comes to the mind because NPOs are not first way we say it's a non-profit organization, non-commercial organization. If it is non-profit, non-commercial organization, then how the income, how the expenditures. So these words are looks bit more on a commercial terms, and but we are using this in NPO, non-profit organization. So can you elaborate what is income, what is expenditure in NPO scenario?
Definitely, sir. I think in terms of these key words, okay, that we are kind of referring to, I would, and as you have asked, in terms of the definition that goes into the technical guide, what I can best do, in fact, the wordings that has been used by the technical guide, okay, I would like to showcase it to the audience, and then I would like to elaborate those definition a bit so that the concept comes cleaner to all those participants who are listening this webinar. So I would request for your permission to share my screen.
Please go ahead.
Yes, sir. So if you see in terms of those critical definition, in terms of how our technical guide has defined it, so it is first, let me get into the income piece. Okay. Now, income is the increase in economic benefit or service potential during the accounting period when that results in an increase in the net assets of the NPO. Now, this is how the technical guide has defined income. Now, in this way, if I want to simply put it, this is the principal activity that would generate revenue for you. Okay. And through that revenue generation activity, you utilize all those net assets that you have in your balance sheet. So that is how income has been defined. Now, as simple in the case of NPO, it could be some subscription fees, some program that you run, and some income that you derive out of it. So even that would fall within the umbrella of income. Clear? Apart from that, now the expense has been defined as follows. Expenses are decreased in economic benefit or service potential during the accounting period in the form of outflow or depletion of assets or incurrence of liabilities that results in decrease in the net asset of an NPO. Now, it clearly says that it is decreases the economic benefit or there is an outflow of resource. Okay. Now, to run an NPO, there are multiple or many expenses that you would see in your experience. Some would be your rental, your employee related expenses that you would incur, okay, utilities related expenses, depreciation, because there is a depletion of assets, okay. Now the program that you conduct from time to time, again, that would foresee for you to incur some expenses. All those eventually will satisfy the definition of income and expenses as per the technical guide that we are referring to.
Yeah, thank you very much, Mithulji. This is absolutely, friends, why it was so required to start with the ongoing session. See, we need to understand the basis also, what we constitutes the expenses, what we constitutes the income. So that's the reason we've been benefited by the deliberation and been taking us to the education course by Mithulji. Thank you very much. So I just moving ahead, like always, this is sometimes the question comes to the mind of Raviji. This question comes to you. Is now since we have understood the expenses and we understood the income also, so let's come to the income side. Like first, as been explained by Mithulji. So Raviji, just we need to understand. Like, see, as far as the from the technical guidance guide point of view, what criteria does the technical guide recommend for recognizing donation grant in the financial statement of an NPO?
Yes,
We need to
sir.
understand, please.
Yeah. See, when there is a grant or donation, these two are supposed to be, I mean, recognized only when there are two conditions. When you satisfy both the conditions, basically. The first one is like whether the NPO is able to comply with the conditions attached to that grant. Right. I mean, if then they're giving some grant, you are supposed to construct a building, or you're supposed to serve this, do this job, and do this welfare, achieve this much percentage of, growth or whatever it is, whatever they have attached to it, that is supposed to be, that is first of all here, reasonable certainty. I mean, sometimes it is two ways actually. First, they say like, no, I have received the money, but NPO, if you are not confident, you are not reasonably certain. Reasonably certain, I can say in simple words, like above 50% confidence. If you don't have confidence, then you cannot recognize it. You cannot recognize, but say you received the money in advance, then it is going to become liability. As per the agreement, you may need to refund it in case of, obviously, if it is refundable, it's going to be a liability. No, I have a confidence, I am going to satisfy the condition, that money is going to be mine. Then you regard it as a deferred income. That is the first condition what I would like to say. And the second condition is going to be like donation and grants are going to be received for sure. Yeah, say once I perform my job, I'm very sure I'm going to get the money. Right. So that certainty, I mean, there is no doubt with respect to certainty of receipt of the money. Right. These two conditions, if you satisfy, then record it. I just repeat, first condition, NPO should have reasonable certainty that the conditions attached are going to be satisfied. And the second point is, and there is no uncertainty with respect to receipt of money. But point is, just receipt alone, I got the money doesn't mean that if you have got the money, that means second condition is satisfied. But there is but first condition also you are supposed to look at it.
Yeah,
right, sir.
That's true. So, friends, Raviji has elaborated on this point, and just add on what he said is that either you are since it is the mandate of the technical guide to maintain your books of accounts on accrual basis. However, even if still you are maintaining on cash basis also, these two criteria even will fall under that particular maintenance of the books also. Until unless there is good amount of the certainty about the end use of the amount received, need not to recognize this as an income. Am I right, sir?
Yes, sir. Perfectly, sir.
Thank you. Friends, yesterday what we had discussed is there are two types of grants. One is the monetary, other is the non-monetary. So since non-monetary grants has also equally been recognized in the balance sheet, we had seen and we had been taken course to that particular point. Now the same, because since there is non-monetary guides, so non-monetary grants and the donations which we are receiving by the NPOs, the question always comes: the financial figures we understand how to record, but always there is a challenge how to record the non-monetary, that is the non-financial grants and the donation. Mithulji, please, can you elaborate on that? Can you take us to that point?
Certainly, sir. So, sir, this is an important area when it comes to the accounting and the level of disclosures that we put forward in the case of an NPO. In our experience, what we have seen that this is an area where most of the NPOs, okay, who basically are in a way not correctly following the technical guide, they do not properly disclose. As an auditor, as somebody who needs to vet the financial statement, we should also be very careful in terms of the level of disclosure of these non-monetary grants, because uh, as we know that the very basis or foundation of NPO is to serve. Okay, now serve humanity, serve for some possible or positive cause. Now, sometimes what happens is there are such non-monetary grants. Now, to just give some few examples, it could be some gift, some pro bono services, okay, as part of the NGO that you are operating at, okay, which you may receive it from the people or the community at large. Now, we are very clear, as you rightly said, that the accounting was discussed yesterday, okay, in terms of how should we measure it, okay. Now, in terms of disclosures, it is very, very important that we demonstrate and disclose all those possible non-monetary grants that we receive during a particular financial year. Now, this is because this would help the user of the financial statement, the reviewer of the financial statement, to understand as to what all level of activities has been performed during the year by the NPOs, okay, or the NGOs, and to what extent benefit has been received by them, okay. So to have clear transparency and consistency from year to year, it is very, very important that we disclose this. Now, one of the important premise that we need to understand as to what should be disclosed. Okay, one simple question can come is what should be disclosed? Now, if there are challenges sometimes that you cannot quantify something, okay. Now, if those be the challenges, it needs to appropriately come out in the financial statement. To the extent possible, we should recommend that you quantify those activities, okay, by placing a correct fair value for it. Now here you might want a service of a valuer to come and assist you in measuring this services. Now that amount that you derive, or the expert derives at, that is something that you are supposed to disclose along with the quantitative details. Okay. Now this is something that the technical guide advises to disclose in the financial statement.
Thank you, Mithulji. It's a really, I mean, friends, definitely it is a difficult task, not difficult, it is a bit interesting task also for the organizers and for the auditors also, to ensure that how the non-monetary items will be accounted for, either in the balance sheet or coming to the income expenditure is concerned. So, friends, as we had discussed till now, is the monetary income, that is, monetary funds which are receiving the non-monetary funds. The other item which we comes onto the income side is always the other income. Sometimes we say it's the other income. Other income consists of many things. So I just require Mithul is saying, stay back with us. Is the idea is this my small related question to you is what is the classification of other income in the financial statement of in the case of the NPOs?
Certainly, sir. Now again here, sir, in order for us to categorize income at large, okay, very important is that we understand the objective and the mission statement of the NPO. So if we just divide this objective and the mission statement of an NPO, you will come across to note that what are the primary activities that the NPO is supposed to carry out, and what are the non-primary or secondary activities, okay, which the NPO can derive through performing the primary activities, okay. Now, primary activities can be imparting education or some religious stuff or some charitable activities or anything. Okay. Now, once that objective and mission statement of that NPO is made known of, any income that relates to those primary activity will be your gross receipts of revenue. Okay. Now that piece of understanding is well clear with us. Now, where sometimes we get stuck is how to arrive at the secondary activities. Okay. Now, secondary activities can be, for example, your rental incomes, while your objective is to promote education, for example. Okay. Now you have a premise which you have put it on rent, and that derives you some rental income. Now that becomes your other income, because your primary objective is not letting off of properties on rent. Okay. Now in that case, this rental income becomes your other income, because it is coming out of the secondary set of activities. Okay. Then sometimes you have fixed assets which you sell off, which you dispose after you use it or for some other reason. Now the proceed that you arrive at, and assuming that you make some gain out of those sale, that is also another income for you. Next, let's say you have a bank balance, okay, and you as a mission statement, while you have a primary activity, but you understand that okay, there is some reserve left which you wish to invest, and once you invest, let's say you invest in some shares or dividend or some FDs, that would derive you some interest income or some dividend or some profits. Okay. Now again, that is not your core activity on which your objective or mission statement is. So this will eventually fall within the umbrella of other income. Now that's how we have to understand and classify this in the financial statement, and more specifically your income and expense statement.
So friends, has been elaborated by Mithunji, is we need to understand that why it is so required. See, if there is a significant increase in other income as compared to your primary income, that is donation, grants, and other things, means thereby the organization and the NPO, see, as a reader to the financial statement of an NPO, we can make an understand. Means the NPO is indulged in some other activity whereby the existence itself could be in difficult time, like because if suppose they have other income from by way of disposing of the fixed assets, and they have a lesser amount from the grants and the donation, means there but somewhere there is a problem with an donation with an NPO. So all these things makes us and helps us the third party to understand the as an going concern whether the NPO is what going what running or not. So, thank you, Mithunji. See, Raviji, see, always, see, this is the income side, friends, what we have discussed about the primary income and the other income. So now if you go to the left side of the income and expenditure is in relation to we starting from the bottom is the finance cost. Many a times because the funds sometimes comes as far as the NPO is concerned, because in the change scenario, many a times the funds have been arranged from the outside on the borrowing cost also, as a borrowing cost. So borrowing cost, if it comes a borrowing, money is coming from borrowing, means there is a finance cost to it, attached to it. So Raviji, can you take us and make us understand what is the classification of the finance cost in the financial statement of an NPO? I mean, can we have an idea of it?
Yes, sir. See, the finance cost, the definition, finance cost basically the cost what you have incurred for taking the loan. Bringing money, finance basically. Correct. The cost what you have incurred in the sense what you need to pay because of borrowing. That is borrowing cost. If I had not borrowed, I would have not paid this amount. To say incremental cost basically. So the first line item of finance cost is going to be interest expense. Yes, interest expense I do pay because I have borrowed. If I had not borrowed, I would have not paid that. I would have not incurred that. And the other things, the next line will come to the other borrowing cost. Yeah, what is other borrowing cost? Say, as you said, like yesterday we had a discussion like loans with interest, without interest. But interest may be there, may not be there. That is one. But there may be some processing charges or zero coupon. Zero coupon. That is whatever. If there is a processing cost or something, a documentation cost, something, those are all going to be other borrowing cost. Correct. That is also incurred because we are actually borrowing. And the third situation is also there where the gain or loss in the foreign exchange transaction. This is very clearly explained in accounting standard 16. The effect of foreign exchange on foreign exchange effect on the borrowings. To the extent, I didn't remember exactly the terminology, but that is clearly explained in accounting standard 16, sir, basically. So my point is simple. It is coming in three lines. One is in interest expenditure, second is other borrowing cost, and the third one is with respect to like applicable net gain or loss on foreign exchange transaction.
This is fluctuation in foreign currency.
Yeah, but it is not exactly net gain. Finance. All right. If you give me a second, I can share the screen of A16 and I can. Is it okay?
Yeah. Please go ahead.
Just a second. Yeah. I think you're able to see.
Yeah, please. Yeah.
Yes, sir. So this is nothing but the exchange difference arising from the foreign currency borrowing to the extent it is not regarded as interest cost. So that, if you give me little time, I can explain it to you in detail. Is that
Yes,
fine?
yeah. We within a time, yes, definitely. Small time is given. Send it, please.
Yeah,
Yeah,
understand.
yeah, please.
I mean, generally it happens like this. Just a second. I'm taking notes and whiteboard. Sorry. So, are you able to see the whiteboard?
Yes, it's 60, please.
Yeah. Say if you have taken.
Still,
Sorry.
at my end, it is still loading. Mithuli is still is loaded at your end.
Yes, Ravi. If you are typing something, we are not able to see.
But I'm trying to type, but it is.
Yeah, please. No, it is better. You please.
No, sir, but I'm not able to type anything.
Okay, fair enough. Let's move on from here then.
Okay, fine, sir, no problem. Suppose if you have taken some amount of, say, example, we have borrowed, say, $100 in India. So $100 rupees you have borrowed from outside India. Correct. $100 is equal to into 80 rupees. If I take it, it will come to 8,000 rupees. So if I had borrowed 8,000 rupees in India, what would have been my cost? Right. But as on 31st March, since it is a borrowing is a monetary item. Since it is a monetary item, it requires a restatement as per accounting standard 11. So when the restatement takes place, then automatically the forex difference will be generally charged as either as a foreign exchange gain or foreign exchange loss is going to come. So the forex loss is happening. I mean to say, my total cost of borrowing is happening, say, 7,500 rupees because of the cheap rate, which is, I mean, lesser rate charged by outside India. 7,500 is my borrowing cost, interest what I have paid to outside India. If I had borrowed in India, it is 8,000 rupees. But my foreign exchange loss is actually 1,000 rupees. So my total cost is equal to 7,500 plus 1,000 is equal to 8,500. Right. So now what should I do? 1,000 rupees of foreign exchange loss, I should not take it as a foreign exchange loss. So the portion of 7,500 to 8,000, this portion should be treated as a finance cost. And the remaining over and above 8,000 rupees, what is there, that 500 should be your normal foreign exchange loss. That is the way it is supposed to be presented. That is prescribed by accounting standard 16.
One wonderful, Raviji. It's quite exhaustive the way you told, very in a simple way. It's really interesting to understand. Friends and every members must have been benefited out of it. Definitely, it's really right way because that is how we take the benefit of the person who are tutoring a lot of the corporates also. So now we have been benefited by, I mean, getting a tute from the person incidentally who are tutoring the corporates. Thank you, Raviji. So the next question, see, I always, Raviji, I ask is because you had given so much task to the NPO. You are asking them to maintain grants, funds, balance sheet, preparing balance sheet. You are asking them to prepare an income expenditure account, preparing a records about the donation, the grants. Definitely, one thing which comes to mind is definitely who will do it. It is the employees. So first thing which comes in the picture is the employee. It means the NPO is having employees, number of employees other than the agents. So employees, the question comes immediately is what is the recommended presentation of the employees benefit expenses in the financial statement and what are the specific component that should be shown separately?
Yes, sir. Employee cost, it is actually more almost same as Schedule 3 requirement Division 1. So, I mean, anyhow, that is a simple point. So, employee cost is like basically it includes the salaries and wages. And next thing is like contribution to provident fund or gratuity fund or anything, whatever their contribution, basic contribution will be going there. And the next is staff welfare expenditure. Yeah, this is pretty simple and straight. It will be there in every commercial or non-commercial company, sir. This is, I feel like, very straight and simple.
Yeah, thank you very much. Mithulji, now continuing from
Yeah.
the where Raviji has left, this is the in the case of NPO, what we have understood and we had found somewhere is that the word is specific item.
Hmm.
So my understanding is, I say, we need to rather understand from you what is the recommended presentation and disclosure for specific items in the financial statement, and just bit going further. Can you elaborate what are the specific items? Can you give me some few examples of it?
Definitely, sir. So, sir, if you see, not only for NPOs or let's say non-corporate entities, even for corporate entities, we do have specific line items. Okay, sometimes for which the institute and the related documents that we get prescribe the normal disclosures and presentation that you should have in the financial statement. Now, first, let me answer few examples that in the world of NPO can be described as specific line items. Okay. Now, as simple as just carrying forward from what we have discussed yesterday, okay, is the contribution and the funds. Okay. So you have varieties of funds that are there in the world of NPOs, the unrestricted, the restricted, corpus fund, designated fund, endowment fund. Okay. So for these specific line items, the institute, as part of our technical guidance, will prescribe the format that you should have. You should have at a minimum the opening balances, the closing balances, the moment that is noted during the year. That is something that the audience or the users or the preparer of the financial statement should have in the financial statement. Apart from that, the next example can be investments. Okay, because uh, normally the primary activity, the objective and the mission statement for which the NPO is standing, okay, and apart from those normal activity, what are some specific activities or specific investments if the NPO is making, that is also prone to disclosure in the financial statement. Again, there the format in which you are supposed to disclose it and present it in the financial statement has been well described under the technical guidance. Then, most importantly, is the related party transactions, because related party transactions, if you see, sometimes what we do not well capture all those transactions or all those relationships that we owe to or as part of the standard are supposed to get captured in the financial statement. We miss out, okay, because of lack of the definition or the requirements. Now, these are the specific examples that should be given most important, okay, or importance when you are preparing the financial statement. And all those specific, or rather, for all those specific line items, the institute has come out with, like, for example, there has to be an opening balance, closing balance, what movement that you note, what are the disclosure, what are the relationships, etc. And these are some of the parameters that you are supposed to capture in the financial statement, sir.
Yeah, Mithulji, since you have touched upon one point in addition to this, I'm continuing from where you had left, is the related party transactions. And then for us, as far as if we take it to the related party transaction, then that definitely helps. AS18 helps us, am I right?
Yes, sir. Yes, sir.
So
AS18 very much helps us.
AS18 is definitely helpful to us, and it is quite an elaborate accounting standards has been issued by the accounting standard board. So my query in relation to the same is that what is the significance in relation to this particular AS18 in relation to the NPO, where the NPO size is micro small and micro small NPOs are there, because AS18 itself does not give an requirement as to making in compliance to the by these MSMs.
Correct.
Am I right? Please.
Yes,
Even
you're right. So, sir, if you see the as I was briefing you during this question number 1 or question number 2, that the level in which we categorize an NPO is very important, because as part of the requirement because sometimes what happens, the very foundation on which our accounting standard are basics are established is that you should also the cost benefit analysis. There has to be a cost benefit analysis in the financial statement that you prepare. So the micro entities and the small entities, looking at the size, okay, uh, the applicability of AS 18 is not mandatory for these audience. Okay, so if an NPO is, let's say, falling in under level 3 or level 2, then the technical guidance gives an exemption that you are, if you do not follow AS 18, it is okay. Now, in our experience, okay, there are very, very important parameters that we should consider and to disclose or why to disclose related party transaction is number one, it would establish a good corporate governance. Now, this is very, very important in the environment that we are in. Okay, a good corporate governance would establish that yes, the NPO is well managed, well planned, and well balanced. Apart from that, there will be some legal requirements that might come out in the future. Okay, let's say a reconciliation is being asked by the or some regulatory requirement, or for example, let's say income tax department. Okay, now it would also assist you in such areas. Now these are crucial points that one should understand, and therefore the institute recommends that if you follow and if you apply AS 18 for all the scenarios, it is well and good. But having said that, in terms of the level that we have, level 3 and level 4, as you rightly mentioned, are being exempted to not apply AS 18.
See,
But as
friends, yeah, please, sorry.
But as auditors, we should strongly recommend our clients who are into level 3 and level 4, because level 1, level 2, it is anyways automatically applicable with the technical guide itself. But where you see level 3 and level 4, now these are specific transactions, these are important transactions, and from our experience, we know that as auditors, tomorrow any regulatory agency might ask you about your related party transaction. So that would help you to connect. Okay, so that's very, very important that you disclose such important transaction in your financial statement.
See, the friends, what Mithulji has just took us to the point is we need to understand. So the better it is, the transparent and the more disclosure are there, which are relevant for the third party, it helps in generating and building the good end, as in the case of the corporates and non-corporates. Anyway, moving forward, like Ravi, this I'm just since we had skipped a certain point, the relative point, we had understood like what is the relative party name. But ultimately, one thing is which comes to the mind of the member in general is that see income expenditure, how elaborate it should be. I mean, what sort of an item there should be like. So in that case, my question which comes immediately is it mandatory to provide detailed disaggregation for each item in the income and expenditure account? And what is the underlying rationale for such detailed breakdown? How does it contribute to the transparent financial reporting often for an NPO? These are 2-3 questions together, and just briefly, I just ask and answer. Ravi.
Yes, sir. So you were asking with respect to disaggregation.
Yeah.
Yeah. So I mean, see, generally what happens if you see some of the financial statements, there will be one line item called miscellaneous income or miscellaneous expenditure. Right? What is that miscellaneous expenditure? That is miscellaneous only. I mean, we don't know what exactly it is. And again, is it a small number? No, it is not a small number. They'll keep big number, but miscellaneous expenditure. And in some of the assets and liabilities also, if you see others, what do you mean by other? Other, okay, if it is a small number, it's acceptable. Not like you don't, I mean, that's fine, acceptable. But it's a huge number, they will keep like other. And as you also rightly mentioned yesterday, like it is not like so stringent format or something. You can add one more line here in the, I mean, schedules or something. They give only 2 lines. Okay, if you feel one more thing will fit and that makes more sense. Yes, see, ultimately our objective is we wanted to give the true and fair view of the financial statements. Correct. Now the reader should understand what exactly my financial balance sheet is and what is my performance. That is your profit and loss or income expenditure statement. Right. So here the technical guide has given very clearly, right? If the, I mean, if the item, line item or ledger account, I mean, grouping, the grouping of some expenditure is 1% of gross income or 1 lakh rupees. Okay, whichever is higher. If your amount is coming more than this number, then it cannot be, that is a materiality kind of concept, indirectly, not exactly. So materiality concept, if it is coming above this number, say 1% of my gross income is equal to say 10 lakh rupees. Okay, 10 lakh or 1 lakh, whichever is higher, is 10 lakh is high. So I found one item called, say, my travel expenses, something of professional expenses, 12 lakh rupees. So then professional expenses has to be shown separately, like under the other expenditure, professional expenses 12 lakh. You simply cannot put it under the head miscellaneous expense or miscellaneous income. This is what the importance, and that is what the criteria given by the technical guide also, sir.
Yeah, thank you. Yes, definitely, friends, what is required to be disclosed, which is of an importance to us and to the third party also, we should try to disclose as much as we can. But now the point, Ravi, is continuing from here, like we had just missed one at the time of understanding the revenue. We missed one point, like, is since the NPO deals into services and the sale of goods to the third party, to the beneficiary. So and I just want to understand from you, what is the criteria for recognition of revenue, either in the case of the sale of the goods or the sale of, providing the services, rendering of the services. Right? Please take us to the books.
Yeah. See, with respect to sale of services, let me start with. Okay. So the wordings, whatever they have mentioned, is exactly same as accounting standard 9, with a slight modification in the sentences. So here, to say, any kind of service will be, I'm going to bifurcate into two kinds. Like, is it only one activity, one act, or more than one activity? Service, like in India's language, we'll say like performance obligation or something like that. Okay, so are we going to do one activity or more than one activity? Right, accounting treatment is not same exactly as per 115, but yes, if it is only one activity, right? Sorry, let me start with more than one activity. If it is more than one activities are involved, then go by percentage completion method. Yeah, if it is, say, example, 4 activities are there, 4 services I'm supposed to perform. Out of that, one service has been completed by 31st March. So I'm just simply saying in example, 1 divided by 4, right? That is 25% of job is completed. Yeah. So what is the basis for your again percentage completion? Percentage completion, generally cost based completion, we will see it. So what is the total cost expected, right? Out of the total cost expected to complete 100% of service, how much cost so far I incurred, or this particular service has incurred or something, right? So cost incurred so far divided by total expected cost into 100. If you take it, percentage completion will come. And on the total revenue, total contract value, you can take that to profit and loss. That is, so if it is related to only single activity, a single service is there, then we will follow completed service contract method. Yeah, see, completed service contract method. So here, like, completed service contract means which activity, act of that, which is very significant, very significant. Once this my job is done, okay, done, then you are supposed to, you can record it. Let's say simple job is, very simple example. So income tax return I'm filing for you, or somebody, that is also one small kind of service. Okay, when do I say, suppose I am filing for your income tax return, assume. Okay, when can I have the right to say, sir, pay me my fees of 10,000 rupees? Right, first I should file, right?
Okay.
Yeah, first I have to file it. After filing, not just gathering the information will not do the purpose.
After verification.
Verification and completion, putting it in the form and just upload it, and then giving you acknowledgement or getting a OTP or something, that those are all small activity. But so the first primary and the significant activity has to be completed. When significant activity is completed, then I can say, sir, my job is done. 10,000 rupees is receivable from you. I can say that is my income. That is with respect to sale of I mean, service.
And with respect to sale of goods?
Yeah, sale
Yes,
of
sir.
goods, like, yeah. Timothy,
I
would
can
like
take
to?
up this question. Yeah, I can take
Yeah,
up this question.
please,
Yeah.
please.
Sir, in terms of the sale of goods, okay, and as Ravi has rightly mentioned that the criteria on which your revenue recognition should happen are been well explained in the standard. Now, I will just quickly walk through each one of you as to what are the criterias that have been explained in AS9 for sale of goods or rather sale of services also. Now, very importantly is that the seller, okay, who is performing the services or who is performing the act for you, has transferred all the significant risk and reward in the goods or services to you. Okay, so that becomes one criteria. Now, this is has been explained in the accounting standard 9 of revenue recognition. Second is basically there is no significant influence once the first criteria is met. Okay. Now let us say that one seller is selling you a furniture. Okay. Now tomorrow, once the furniture is at your place, okay, there is no significant involvement from the seller side to the buyer. Now let's assume that tomorrow there is a fire, okay, in the premise where the furniture is being kept. Now, all those insurance related stuff, discussion that you would carry out, now that will be between you and the insurance company, and the seller will not have any say there. Okay. So, there is no significant influence which the seller can make once the risk and reward have been transferred. So, that's how the standard, the criteria have been defined. Then comes is that the revenue is measured, okay, or the revenue could be measured. The amount is certain. You are able to measure that what is the revenue that you are supposed to measure in the financial statement. Okay. Fourth one is the collection certainty. Once you make the sale, the collection of that money is certain from the buyer to the seller. Now, these are the criterias in which one has to assess, and based on that assessment, they need to record this revenue in the books of accounts. Now, this becomes our primary Gita or Bible for us to recognize revenue in the financial statement.
Yeah, Mukulji, yeah, thank you very much. And just I was looking at the point, but touched upon by Raviji. That was in the case of rendering the services by the NPOs. And in that case, if there's a multiple phases services, then it has to be on the percentage completion method. So one thing which immediately clicks to the mind of the member is in the case of percentage completion method, as in the case of the corporate sector, like we used to make and compliance to AS9. So that is in relation to unbilled revenue. To be more specific, my question is that in the case of NPO also, the provision for the unbilled revenue or recognition of the unbilled revenue has to be there?
Sir, is this question to me? I can
Yeah,
take
yeah.
this question.
Please to me.
Okay. Yes, sir. So, sir, in terms of now, let me just address this in two parts. Number one, the first question that you have asked is whether percentage of completion is there and mandatory to be followed, or should it be followed at the completion of services. Okay. Now, this is one piece of question. The another one is basically how unbilled revenue can be considered in the financial statement. So I'll answer both the questions here. Now, coming back to the first question, okay, where we say that whether percentage of completion should be followed or revenue should be recognized once the services are completed. Now, sir, here, if you see both the standards of AS7, which is on your construction contract, and your AS9, which is on your revenue recognition, okay. Now, both have well explained this argument, stating that revenue needs to be proportionately recognized as and when the risk and reward is shifting from the seller to the buyer. Okay. Now, this is the primary condition. Now, assuming you say that I'm not able to establish the percentage of completion, you're not able to establish that there is an estimation in terms of how much work has been completed, you're not able to establish grounds for it. Then, in that case, the standard is clear that once the services are completed, you are supposed to record the revenue. But having said that, all your efforts should be made to ensure that, to the extent if you are able to estimate the percentage of completion, all your effort should be made on that direction. Only in an unavoidable situation where you are not able to establish the percentage of completion, then the last resort is, once the services are completed, you are allowed to record revenue in the financial statement. Till that point, you will have to withhold recording the revenue in the financial statement. Now, this is one piece of answer to my first question. Now, going back to the second question, where unbilled revenue. Now, unbilled revenue, as the very important criteria that we have discussed, okay, that the significant risk and reward has been transferred, there is no significant influence, okay, the revenue amount can be measured reliably, okay, and also the consideration, the collection consideration of your receivable, you are certain enough that you will receive it from the buyer of the goods or services. Now, these criteria, if you are able to establish, okay, then unbilled revenue on the accrual system, you are allowed to recognize in the financial statement.
Thank you. This is definitely, it is quite interesting. And see, just I'm just stay back. I'm just asking one question which comes to us is sometimes the resources of the NPOs is used by others. So, I mean, this challenge comes always to the organizers, to equally to the auditors also. So, in that case, what are the criteria for the recognition of for the revenue arising on account of this resources being used by outside party, third party, that is?
Yes, sir. So even if my resources are used, okay, the very important question that we need to assess and determine, are they resources being used on payment of some consideration, or are they being provided free of cost? Now, based on that, the accounting should happen, okay. Now, but having said that, if the resources of the NPOs are being used externally, these are supposed to be measured and given an impact in the financial statement, and also appropriate disclosure should follow.
Yeah. Friends, we are going very fast with the pace, incidentally, as we are big end of the session also. But I will not forget to come to the question next to the Raviji. Raviji, this always restricted, but we discuss is in relation to restricted funds. Sometimes it's a more need to be understood by the members at large. So restricted funds once comes it comes with the revenue also if it not been if it stays unused. So my question comes always is that if restricted fund is generating some income or revenue, how the treatment will be then in that case? I mean the income which is generated through the restricted fund.
Yes, sir. Generally, I mean the income generated from restricted fund, if it is what is said in the contract, the stipulate that sentences mentioned in the contract is more important. If they say that that money also, that interest income also, whatever the extra investment income, that also should go to restricted fund, means it has to be credited to the restricted fund directly. It cannot go to the my income and expenditure statement. If they say like no, nothing like that, you can use it for the any other general purpose, general usage, then it will be transferred to your statement of income and expenditure, sir.
Thank you, Raviji. It's really nice. In a very short and crisp way, you had come out with the explanation. Mithulji, yet we had touched upon way back about the general criteria for the recognition of the item of the expenses. For example, in the case of program implementation expenses, sometimes it is the office and administration and the maintenance expenses. See, what are the general criteria about, like how to recognize this, please?
Yes, sir. So if you see from the parlance of income or revenue, which has been explained through a standard, we don't see such criteria has been defined for expenses. But having said that, based on the industry experience and the businesses that are running, okay, the criteria that the institute has recommended for preparation of financial statement and more specific to expenses are something like this: that number one, the expenditure should be incurred, okay, and it should be incurred for the specific task, okay, to the objective or the mission statement that you are catering to. Now, this becomes a very important that not all the expenses, ideally expense, as we know that it's an outflow of economic benefit, okay. If not immediately, in the future, it could also come out. But having said that, it should be incurred for the objective that you are trying to achieve as part of the organization. Number one. Number two, it should be measurable. Like revenue, it should be measurable. Expense should also be measurable. And also number three, that the expense that you undertake, okay, it should in a way, it should in counter give you the economic benefit, okay, for the objective that you are running. So these are some criterias that would determine the expense and how we should record that in the financial statement.
Thank
Yes,
you.
sir.
Thank you, Mithulji. See, Raviji, just
Yes, sir.
at the beginning of today's session, Mithulji has given a very sound presentation about the level 1, 2, 3, and 4. And then has been understood that the levels, the various levels has various type of compliances. Some are exempt from one compliance and other is mandatory to make a compliance to the same. So equally, these compliances are required for the purpose of making a compliance to the accounting standards also, because accounting standards are the something which always we call is the encyclopedia and the Bible to us. Incidentally, as a chartered accountant and the fraternity and the member in the profession. So I just keep on. I just need to understand rather from you is that sometimes the activity considering the level of the activity of the NPO. I just look at some accounting standard may not be relevant to one NPO. And in that case, unless the transaction or the nature of the transactions is happening in that particular NPO, so in that
Yes.
case, that accounting standard may not be applicable, may not be relevant. And if that is the case, just for the benefit of the members, can we have some examples to such type of events?
Yes, sir. Like yesterday also we discussed one small point, like NPO, they may not be paying taxes. They may are exempted from. So then under that, when you are not liable to pay tax, then there is no point of creating deferred tax asset or deferred tax liability. So considering that accounting standard 22, yes, obviously may not be applicable to the NPO. And the second simple point is like say accounting standard 20 also. Right, 20 talks about earnings per share. Right here, there is, I mean, the NPO, like as we started the session itself, it is not like we are not going to give back any dividends or something to the contributors.
The content.
Right. So then there is no point of presenting EPS. Right. So no diluted, no basic, nothing, no information with respect to accounting standard 20. And at the same time, what is that? I mean, AS 25 also, like interim financial reporting. These and all may not be applicable for them unless until a special requirement comes up, sir. Otherwise, more or less, like accounting standard 13 is the applicable, standard 12 is for government grants. So obviously, everybody will be having some or other fixed assets. So AS10 will come into the picture. Employees though will be mandatorily there. So AS15 also comes into the picture. Borrowing cost, yes, comes into the picture. So number of things can come up. These are the few standards which comes to my mind that may not be applicable to a particular NPO.
So friends means thereby, as the VVG has told us that wherever there is no requirement as to the, I mean, it is absolutely the AS is not at all applicable. So need not to worry, just get out of it and make compliance to what is required. Friends, before I take I take next question, it's my honest duty to just for the benefit of all the members to let everybody know that this publication which has been brought in by the Accounting Standard Board, that is with the name Technical Guide on Accounting for Non-for-Profit Organization, that is NPOs, is very much available on icai.org. I just again, it is on our institute's portal, icai.org, under the tab that is the resources tab, along with the Excel file of the illustrated format of the financial statement also. So for the benefit of each and every member, need not to type it again. You can be benefited. You can download. You can make your own interpretation out of it, and you can make you can take a benefit of the expert opinions from our experts equally. Like Mithulji, with going these
Yes,
words,
sir.
we'll be repeating this particular observation at the fake end also for all the members who are joining us in large number. One thing which comes is we all understand how the depreciation and will be calculated onto the assets which is financed, which is the financial assets been created or generated or been placed in the books of accounts. But many times in the NPOs, what we received is the donated assets.
Yes, sir.
So yesterday what we had understood is the valuation. We said that is that the nominal valuation should be there and something this way, how the valuation will be. So now the point is, first of all, the first question is the depreciation on the donated assets has to be there. This is one point. And the second point is, yes, and the method, the rate on which the depreciation will be calculated.
Yes, sir. So, sir, in terms of depreciation, number one, as we see that there is a very specific standard that defines how the accounting for depreciation should happen, along with all the disclosure and presentation in the financial statement. So, it is mandatory that all the assets that we have, okay, needs to be depreciated. Now, what are the options available with the preparer of the financial statement? There are two options, as we all know. One is basically your straight line depreciation, okay, and another one is basically a written down value. Now straight line, as we all know, that you will carry a single amount of depreciation over the useful life, okay, or expected useful life. Now in contrast, if you see the written down value, in the initial years you will have higher depreciation charge compared to the later years. Reason being, the asset would be, or the enjoyment of the asset would be used more in the early years than in the subsequent years. So therefore the concept is like this. Now having said that, okay, now if I just particularly discuss the world of donated assets, and as you rightly highlighted the measurement that we have discussed yesterday, that it has to be recorded at nominal value or insignificant value. If that be the case, okay, then we can say that depreciation will not be applicable for those donated assets, because what you will carry, because there is no significant amount that you can present in the financial statement. So therefore, in such situation, you can basically do not have any depreciation impact on the financial statement. But apart from that, for all the other cases where the asset is lying in the financial statement or in the balance sheet of your NPO, it has to be depreciated as per the standard of depreciation.
Wonderful. Tulsi, the question is, I just missed in between one question. What we discussed at the time of understanding the presentation of the employee benefits, been told that to the members at the time of deliberation that gratuity what we use, and we always understand that gratuity is for is the employee's benefit provision of the amount which used to be provided by the commercial, and now it is a non-commercial organization also. It is mandatory as per the Gratuity Act. But however, in the Gratuity Act, it is stated out there. I just taking one point is the organization or the establishment. The word which they use is the word establishment. The establishment, they said the establishment as defined under Shops and Establishment Act and the Shops and Establishment Act is the state subject. Means thereby, if suppose one in one particular state under the Shop and Establishment Act, they had not identified and recognized NPO as the potential establishment for the purpose of the compliance under that particular Shop and Establishment Act. Do the requirement to the Gratuity Act under the Gratuity Act is so important, is so required even in that case also?
It's an interesting question, sir. If you see from the perspective of, as you rightly said, that these are the state regulated acts, okay, which is the Shop and Establishment Act, and you might see that some state come up with different criteria or regulation for the establishment that get established under their state, okay. But here we need to understand the larger implication that gratuity is being governed by a separate act altogether, okay. We have a separate act in place which gives us the criteria and conditions for implementing this act, and also for all those establishments that are there. And once, if we are uh, if we are applying, okay, this act, Now, it very simply says that if your number of employees is 10 and above, in such case, this act is applicable. So, having said that, this is an act that is governed and been regulated across the India as a territory. So, even if there is a specific clause in the Stop and Establishment Act, it is very important for us to implement the payment of gratuity for those employees if my number of employees is beyond 10 and above as per the requirements of the Payment of Gratuity Act.
Yeah, fantastic. Thank you. It's a really and quite interesting observation, and thanks for it. Sir Raviji, I'm just so because there one very interesting point. If we look at to our income and expenditure, and at the end of the income and expenditure account, what we are seeing is there is one head is there, that is the exceptional and extraordinary item. Now, in the case of NPO, I instantly I fail to understand myself, and I need to be educated by you for that matter. See, what is the exceptional and extraordinary item as far as the NPO is concerned? And if you can provide some example, it will be quite beneficial for all the members. And if I take a question in relation to the same, or shall I posture it later after? Raviji?
Yes, sir. Yes, sir.
Yeah.
So this like exceptional, extraordinary items, yes, it is very clearly given in the format of statement of income and expenditure.
Yeah.
So, and these two words are actually defined by accounting standard 5. Right. So why is it required if you ask? Yes, obviously, end of the day, my objective of this general purpose financial statements is to give the true and fair view of the state of affairs of NPO. So that to reflect the correct picture of your surplus or deficit exactly, I have to give the explanation. What is this exceptional, extraordinary? Right. So what is extraordinary if you ask? Right. I say which is not ordinary. Okay, what is ordinary? That is which is arising out of your normal your activities, basically operating activities, right? Or which are ancillary also. I'll consider as ordinary activity, which is arising out on. I mean, which is not within your area of business, right? Something extraordinary. Something extraordinary may be a theft kind of thing, a fraud, you can say, or maybe some flood, something. I mean, some natural calamity, such kind of thing has happened. You have lost it, which has nothing to do with your business. That has not happened because of your business or mismanagement or something. So, such kind of items I can put under extraordinary. But exceptional, as per AS5, they have given some 7 to 8 points are very clearly mentioned. That is there in India's 1 also very clearly, right? Exceptional items also like ordinary activity, ordinary in the sense which are expected to occur as part of my business, right? Let's say sale of fixed asset, if I say. Yeah, but sale of fixed asset, is it expected? Yes, it is expected. If I purchase today, if not tomorrow, after 5 years or after 10 years, maybe the technology is lost or some other reason it's not working, I will be selling it off. So when I sell it off, obviously I'll get either gain or loss. But if it is in a normal amount or a reasonable amount, generally we don't show it under exceptional item. But considering the amount, considering the timing of the incidence of the transactions, basically, right? So that is materiality, basic materiality and nature and incidence of the transaction, one can be considered as exceptional item. So sometimes generally you will see in the exceptional item impairment of fixed assets, PPE. Generally we do find as an exceptional item. Right, at the same time, sale of foreign, I mean not foreign, sale of investments. Investments you got either gain or loss. That also not in a small amount, like exceptional in nature. If it has happened, then you are supposed to show it separate item.
Raviji, before I take very interesting question which I kept for the last session of this webinar, which instantly very interesting. I just before that I take up. This one more interesting point which comes to my mind is, do you think like what are the other disclosure like which is required to be which has to be given in a financial statement, and what the impact will be there in the financial statement of an NPO? Like, what more disclosure should be there, like other than what we have discussed till now?
That is like in the, I mean, on the trade payables side, when you see MSME Act, I mean, the amount due to MSME Act, other than MSME Act, this line item is going to be there, sir. And other than that, if you say for the specific separate books of accounts के लिए, I mean, I feel like Foreign Contribution Regulation Act, something which may have, I mean, you need to prepare separate set of like what is the funds received
Books of-
from India or outside India. You need to have a separate set of books that may be required, I think, to the extent what I am getting right now.
True. Friends, other thing is, which I said recently is, see, one thing, I just let you know for the benefit of the members, because sometimes the members who are joining probably the first time to the webinar of such type of, which have been arranged and organized by the accounting standard boards. So friends, I just, for the information of all the members, it is that the accounting standard board is regularly, they are very, very regular in bringing out the educational videos, and all these videos are available precisely onto the same site, which I just said earlier also, that is onto the ici.org. And these basically just where you have to go, it is on the different topics, the topics you want to have, and just select that topic and you will get the videos. Already recorded videos are there, and it is always good to understand that particular topic, and will be benefiting in the beneficial interest of the members, and so that ultimately that is a regularly continuously professional education which entails by the institute. And this videos has been issued by the accounting standard boards, equally helps us in understanding. And this webinar, what we are right now going on, and the earlier webinars also, friends, these are available on one ICI TV. The repositories also gives an has been organized. These webinars are organized by the accounting standard boards, are available in the repository of the ICI TV also. So, everything is my understanding. I mean, my saying out there is, all these webinars are not. It is not that the institute delivers and forgo. It is available into the archives and into the portal of the ici.org. Under the resources tab, you can look into, and under the ici.tv also it is available. So anybody can download, and anybody can have an again. For the purpose of clarification, they can visit this. Now, I'm coming to my very, very interesting question, probably for the benefit of the members. And these questions are now in a change scenario, Raviji, is we have seen that because now there is a competition also amongst the very organization, has been Swachh Bharat. Under the Swachh Bharat also, the government of India has promoted, and they had entrusted a task to the various municipal committee to give and deliver how good their city is. So they give the prize also, and once you've been recognized under that particular category, you are eligible to generate more funds from the outside sources. And since, as in the case of the corporates, the companies can generate the funds from the stock exchange. So equally, the stock exchange is there for this NPOs also, friends.
Yes.
So that NPO stock exchange is called the social stock exchange. That is SSE, social stock exchange, friends. So my question to Ravi, in that case, so what type of NPO can approach this SSC? Because this is an interesting case, like, because how they can see, once we say they are for the service provider, they are a service provider. If they are a service provider, how will they serve the funds being generated by the stock exchange, and what sort of funds could be there? So bits, I mean, in a explain it, I mean, in a clear way, if you can, crystal clear way, you can elaborate this very interesting question for the benefit of the members, please, Raviji.
Right, that is very good initiative by the government. Right, as you said, the funds are with the people. See, this is always like, see, I have money. At the same time, I don't want to throw it on the road. Correct, right? So it has to be when I'm giving, when I'm donating to somebody, and that should be utilized in a better fashion. So generally, I have to search where is the, I mean, which are all the, I mean, NPOs are doing good job. They're, I mean, they're reaching to the needy people, and the money is actually getting utilized in a perfect fashion. So this social stock exchange is going to benefit both of them. I mean, the NPO as well as the contributor. Yeah, company wants to do this CSR contribution, whatever the other contribution, but they have to find the good person who does the good job. At the same time, this NPO also is need of money so that they also can do a better job. So it is like one good marketplace, like both are accessible, right? That is when the best part is happening because of this. And the synergy is like synergy in social aims, correct? No, so I mean, if the party synergy in social aim is one, the next party I can say performance based philanthropy also, right? If you do good job, I mean, if you have done that is performance oriented, I'm contributing. You perform good, you do good to the society, environment, etc. Then obviously people do donate, and you will get good points in that. Yes, good donation also will come. Your objective also will be served. That is, I feel these are, I mean, one, and the registration cost when it comes to know in this SSE, it's going to be very minimal actually. It's not a considerable amount because considering the purpose, right? That is what the benefits what I feel, sir.
Fair enough. So, friends, it is something like that. Always we had seen in our life also. In the case of NPOs who are doing good job, they are not short of funds. However, sometimes they are short of funds or because of the reason. They want to do something more, and immediate funds may not be available. And in that case, they thought of bringing some funds through these social stock exchanges, basically. This social stock exchange help them generating the funds. This is through the zero coupon bonds or through the donation through the mutual funds also. There are multiple way and the many more the governments might come up with more resources in the time to come. So my there is one question from the audience side also, Mithulji, and I'm just elaborating this question, and it's a very interesting question. We had replied yesterday also, but since many of the members has joined today, so it will benefit. It may be repetition for one, but maybe one call for the new one. So it is the idea is the question is that the technical guide is mandatory to be followed. One point followed by the similar question is, do you have any can you make an understand of any sort of an NPO where this technical guide is not applicable? I take the question in a both way, like is it
Okay.
is it mandatory, or if it is mandatory, can you elaborate even one NPO, one sort of an NPO where it is not mandatory?
Okay. Sir, now this technical guide, as we all know, has been published by the Institute of Chartered Account of India, our esteemed institute. Now, if you see from the perspective of the setup of the NPOs, as we all know that it can be a company, a Section 8 company, or it can be registered under the Society Act or under the Indian Trust Act. Now, there are varieties of establishments, okay, which falls under the umbrella of the Section 8 companies, the Societies Act, the Trust Act, etc. Now, to bring transparency, comparability, and consistency into the practice, and also in the way we report our financial statement, it is recommended and that everybody follows this technical guide. Okay. Now, this is from the perspective of the following the accrual system of accounting, which is the new norms, and ensuring that the establishment for which we report, okay, those are based on the accrual and those are based on the right principle of accounting, because as we know that the challenges the cash system of accounting throws are many. The comparability, the consistency of numbers are and the transparency in the way which we report are not very clearly coming out in such financial statement where we see cash system of accounting. So having said that, yes, it is in a way, I would say that mandatory is not the right phrase, but it is recommended that we apply the technical guide in all those setup of NPOs, okay, be it society or be it NPO that has been registered under the Societies Act. the Indian Trust Act and also the Section 8 companies. Okay. Now, Institute, because of these varied ways in which the establishments are being set up, okay, the Institute has very well come out with a clarification that there is a level 1, level 2, level 3, and level 4 structure that a non-corporate entity should establish. Okay, so this is my answer to both the questions that has been here. That yes, it is in a way recommended that we follow technical guide for all the NPO accounting, and scenarios where technical guide will not be applicable. If you see from the parlance of the technical guide, okay, it can be an establishment which is micro and established under the Societies Act, okay, or it can be under the Indian Trust Act, okay, or it might be for just some simple activity or for some a short time establishment that has been created. Okay, so these entities can be exempted from the applicability of technical guide, sir.
Fair enough. Thank you. It is really wonderful. Raviji, see, once we comes to from the perspective point of view of the mandates and the mandatory requirement as to the compliance being made, as been told by Mithuji, it is in relation to the mandatory requirement or the recommendatory requirement to the technical guide. Always one point which comes to our mind. Since yesterday what we had discussed is that this requirement of the compliance to the accounting standard is all because of the fact that we are under obligation to, we are under the attest function as an chartered accountant and under obligation to make compliance to the accounting standard as applicable. Now the point is could be a scenario where the NPO itself is not at all required to get its accounts audit. Means they are not under obligation for an attest function. So if they are not under obligation to attest function, is the NPO organization is under obligation to make compliance to the accounting standards?
Not necessary. I mean, see, that is one circumstance like where the gross receipts. See, first NPO is not governed by, if it is governed by a specific act, and if the act says that you have to get it audited, then it is getting audited and it is getting attested. I mean, a member is going to perform attestation function. Obviously, it is supposed to be in financial statements must be in compliance of accounting standards. Okay, if my gross receipts itself are less than 2.5 lakh rupees, okay, and then I will not be getting audited for the tax act purpose also. I will not be getting audited for any other purpose. Under that circumstance, then yes, it is the onus is not on the member because nobody is signing on the financial statements, right? So then that is recommendatory to the NPOs, basically.
Fair enough. So equally, Raviji, this the related question comes in case when there is no business activity of an NPO. Do that in that case also the AS is required or not required?
Sir, that is what. See, when there is a business, if there is even 1% or less than, I mean, if you are not if you are into 100% of non-profit activity, then actually as per the preface it says like you don't need to do it. But end of the day, even the technical guide is saying, even though if you are not into 100%, no, that is a member's own risk that the financial statements are in line with accounting standards. That is what yesterday Pramod Jain sir also was mentioning very clearly. See, we wanted to get the harmonious. I mean, make the financial statements comparable, and we wanted to give the transparency, considering the CSR funds, considering the so much of outside fund and etc. So to reach that, and if you have a small portion of business or commercial or industrial activity, then there is no point. I mean, you have to comply with accounting standards mandatorily.
So, Raviji, I mean, if I take it in a nutshell way, it is either way, whether it's doing in any minuscule amount of the commercial transaction or not, whether they are doing it or not, if there is a test function, the compliance to the accounting standards are mandatory. It is
perfect. Yes, sir, perfect.
So, if together we, box in one way, then if there is onus is on to the chartered accountant to attest, see, onus is on to us And we should not fall into the prey of the NPOs, whether it's subject to AS or not. We have to look into from the perspective of our obligation, which been vested upon by us, on us by the Institute of Chartered Accountant of India, are issued by the through an accounting standard board.
Yes, sir. If member is actively performing attestation function, it's mandatory to ensure that financial statements are in line with accounting standards.
Fine, friends. So we are approaching towards the end of the session, and we'll be taking few more questions, and we'll be taking the live audience question also in the due process of time whenever it comes to us in between. Friends, there is one question which always come to mind, because this particular the VG, see what happened is that what we have discussed till now, since yesterday rather, is that we are, as per this technical guide, the mandate is to move from cash accounting to the accrual accounting. And this is definitely is a new scenario for all of us. And always see, I just remember way back, once the government was in single entity system, they were under been brought into the double entity system by our own institute only, by their extensive efforts made by our representative to the government. And the government has also understood the importance of the double entity system now. So in a same way now, because moving from single entry to double entry was a Hercules task. It was not a single task. It was not simple as it was invest to be. So equally, we look, as we are moving from cash to the approval, it becomes a humongous task for all of us as an auditor and as an NPO also, because sometimes we get associated ourselves with one or more NPO, either way, this way or that way. So we have to suggest and we have to audit. I mean, we are on the both side of the table. Sometime onto this side and sometime onto the other side. So we have to take a call, very, a very genuine call as to the requirement to the accounting standards and requirement to our institutes and the obligation towards an institute also. So in that case, once we are moving from cash to accrual, so I just want to understand how will that be, and what the procedure and the system to be followed, and how the transition between cash to accrual will happen. Because this is something like everybody must be reasonably asking this question from you.
Yes, sir, exactly. And this transition, yes, see, if you want to get into you have to get in, that's a different thing. So cash to accrual system, when you are coming in, first the question will come to mind is opening balance. So first, if you get the opening balance, then okay, then I'll understand cash transactions also I'll book, non-cash also I will book, and I can determine the balance sheet as on 31st March. Right. So getting the opening balance is what something to some extent it is difficult, but some extent it is not that difficult also. You can get it. Right. See, so then you have to identification of the asset and identification of liability is the major task. Identification of asset, what I mean, not just only fixed asset. Yes, in addition to what is your intangible asset and what is receivable, I mean to say grant receivable example. You must have, you were eligible, you had reasonable certainty, but you are not recognizing because cash has not come under cash system. But yes, as per accrual system, as per accounting standard 12, when you satisfy the reasonable certainty, that you are going to satisfy the conditions, and I'm sure government or some party is going to donate me or grant me something, then yes, you should have recognized the grant receivable as well. Right. So I mean, so many assets, it's not like one fixed asset alone. Right. So that is first important. And again, within the fixed assets, if it comes to, I mean, if something in kind, is it that you purchased it or is it something you got it on donation basis? So as we already discussed from yesterday to till date, like if it is something has come from the government, non-monetary item, right? Non-monetary item, then it is supposed to get nominal value, right? And so nominal value, but if you identification of which have come, I paid for it, and which have not, right? So then the next point, sir, I have purchased it, I know the cost of it. Then you just go back to, I mean, retrospective way, you have to just go back. I mean, what is the cost incurred? Yes, accumulated depreciation because you followed cost system. Since you followed cost system, you have not depreciated also actually. So the cost must be there, whatever you purchased long ago, that cost, and yes, determine the useful life, and that asset must be there obviously as an 1/4 your opening balance sheet debt. Determine the depreciation and bring the number to the opening balance. You need to bring it, and then you follow that. Right, that is one way. And suppose sir, I paid some money, I don't know exactly what it is. All right, that is also I mean it is very difficult for me to determine. That is, it may be little I mean, what do you say, the asset is recorded, yes, the asset is recorded, and but I'm not able to calculate it. Correct. So under that circumstance, what are you supposed to original? Okay, one second. Yeah, no, yeah, asset is there. Let's say example, I have recorded, but I don't know how much amount calculation. It is not possible if you say what is there in the books on the date of implementation of this standard. That is what one critical point they have told very clearly in the implementation, I mean, technical guide. As on the date of implementation, what is there in the books, we'll consider that is only the cost. From that date onwards, at least you depreciate. If I don't know original cost, I don't know what has happened to subsequently. I don't have a way, books are not there, something like whatever the reason. As on the date of implementation of this technical guide, what is the value that in your books of account? We feel that is only the cost. And now you determine what is the remaining life of the asset, then depreciate it over prospectively. And in this, obviously there will be difference. Correct. What is there in your existing books and new number will come. That may be increase, new asset can come or existing asset can come down. So the difference is going to hit your statement of income and expenditure. This point is also important. So increase in asset, yes, obviously increasing in your income expenditure as a gain, and decrease in asset is going to be same way. At the same time, liability also. Liability increase means your income expenditure is falling down. Liability is decreasing, then also your income expenditure is, I mean, increasing exactly. So net effect will fall on statement of income and expense.
So means thereby that at the opening, at the time of transition from cash to the accrual, at the opening, we have to restructure our balance sheet so that we take them as the opening balance for the next outcome for the next year to come. So that restructuring will be as nicely as just to make a small example to it. Whenever any organization, there's a commercial organization, adopt an Ind AS, they have to restructure their account as per the Ind AS from the accounting standard. That transition is from AS to Ind AS, friends. So equally, I mean, as we are making a correction to the financial books in from the AS to the Ind AS and make a relevant correction. So equally, the correction we will be making from cash to accrual, and whatever the difference is there, the VG has well explained, it will be routed to the profit and income and expenditure. So friends, we'll be taking a couple of questions which are coming from the members now coming in very fast pace. And looking at to the time paucity, we'll be winding up and we'll be summarizing this entire episode of today's webinar very soon. So friends, the question from the members are the first question is coming is briefly sum up what are the essential non-profit compliances and reporting requirements. Small question, any of the panelists, please.
Yes, sir. I can take up this question.
Please.
So, what are the essential non-profit compliance and reporting requirement? As we have articulated yesterday, that you should have your income and expenditure statement, the balance sheet, the receipt and payment, the BRS. So these are some reporting requirements, okay, which are mandatory that the NPO should publish as part of the financial statement, along with the notes to accounts and accounting policies.
Fair enough. The next question, it is quite an interesting question. What is the financial management of a non-profit NPO is harder than what is for the commercial? That is means what for the profit means. Friends, I'll leave it up to my eminent panelists. However, the question is very simple that absolutely nothing is harder when we can work overnight and burn our oil overnight and 24 hours and 365 days. So nothing is harder for us. However, up to Raviji or Mithulji, please explain.
No, as you, I think I already closed it, sir.
If you want to add on, please. I mean, I just interjected in between, and it is up to you. So please, if you want
Financial management, obviously, like, see, it depends on the capabilities and depends on the sources. It is not like making profit, first of all. It is like utilization of money for the best reason, for the objectives of the NPO. May not be, it's a, yeah, it is not like a generation of profit and for the wealth management. This is not wealth management, it may be wealth utilization, exactly. So if it is in the good hands, obviously it's going to be good. Is a better planning is required, and I mean the budgeting and etc. should be perfect. Then it will happen better, obviously. And actually, see some of the NPOs, some of the NPOs we have seen, like they contribute very good amount of money. At the same time, they have a very good team, like who will, before contribute, even though say, let's say 30 lakh, 40 lakh or whatever it is, depending upon the other NGO, this NGO contributes to another NGO. There is a very good team. They will go and ensure it's for the reasonable cause or etc. etc. They will, drill it down to the, inquiry will happen very high level, then only contribute. And after contribution also, they'll not leave it like there. And there another team, independent team will go and inquire, and they have to get the information like, yes, this money has been utilized properly. Otherwise,
the next question which is coming from the member side is what are the main accounting threats to NPOs? What are the main accounting threats? Please, any of the panelists, please.
Yes, sir. So,
Yeah,
so the main accounting threat, okay, as far as if you see the way in which the NPOs these days within the territory of our India, if you see the way they are, there are many NPOs which are unregistered in nature, okay. So now being unregistered, what happens? They do not follow the right practice of reporting it to the authorities, okay. Now, it is not only the authorities at large, but also the stakeholders who are associated with them for the objective and the mission statement which they are catering to. So that becomes a main threat, and you do not have an or good governance practice. And the best way to build a robust governance practice is by right reporting of your activities or your setup. Okay, and that can happen only when you have a healthy financial statement, the right way of reporting, the right way of implementing the accounting standard. So if you are on the right track, okay, there is a lot of goodwill that you can establish during this process. But if you do not, if you just cross the road, and if you do not follow the path clearly, there are a lot of reputational damages, there are a lot of inquiries, improper reporting to the stakeholders or the donors who are associated with your funds. So these are some threats that comes in between your way if you do not follow a clear, healthy accounting practices.
Because the other thing is which comes to my mind immediately is that if you are not following the right practice, and there is, however, we are not discussing income tax out here, friends. We are discussing the accountings only. So in the income tax also, if you are not following the right practice, and if your registration get cancelled, then the entire assets that is been valued at the fair market value and been tax subject to tax at the MMR, that is the maximum marginal rate. So then again is the one threat, and then everything else follows. That's a separate issue. So my last question from the member side, if I take it, this is, if that is possible, my panelists can read it through. It's a non-profit. Bottom line is its impact in fulfilling its mission. Yeah, please.
That's not a question, sir. That is not a question.
It is a question. Input on this question. Yeah.
No.
Just it there.
You can ignore that. That is not a question.
Fair enough. Yeah, friends, we are about to conclude our session. Fair enough, sir. Thank you. So, again, my one reminder to all my members, friends, this particular technical guide, which I had also mentioned earlier also, this technical guide on non-profit organizations is well available onto the portal of the ICI.org. I just repeat, ICI.org Institute's website. Under the resources tab and along with the Excel file is illustratively available under for the financial statement. This Excel file is also available. So equally, this webinar, what we are undergoing right now, will be concluding in a few minutes from now. Is available under ICI.tv and also under the resources of the ICI.org. Also, you can all these publications, all these webinars, and the recorded webinars are very much available as an education mode from the institute side under the ICI.org portal only. So one can go there and one can read through. Earlier seminars also are recorded there and available under ICI.tv and ICI.org. Both way you can go and you can check. You can be benefited by virtue of this all this hard work which been done by Accounting Center Board. They are continuously there educating us, and they are ensuring that all the compliance is uniformly being maintained and managed by our professional, so that the reading can be reading over a financial statement by third party becomes easier and become transparent and uniform. So, friends, before I conclude my session, it becomes my honest responsibility to thanks, first of all, at the outset, I won't miss thanking you all attending in large number. First of all, it's my honest responsibility. Please accept my heartful thanks to you. And but I will not omit my responsibility by way of not thanking to my eminent panel and experts, CA Mithul Shahji and CA Ravi Kanji. Ravi Kanji and Mithulji had taken us along with 2 days they had spent and made us more wiser as far as understanding the new technical guide on the NPOs concerned. It was a wonderful session. 2 days we enjoyed, and I will not, I'll be miser on my duty, rather, I should say, that if I want thanks first at the outset, my chairman, Accounting Standard Board, CA Pramod Jainji, Central Council member and the chairman of Accounting Standard Board, who had made a lot of efforts in bringing out this technical guide on NPO, along with his teams, and that is the vice chairman, CA Abhesh Hazardji, member Central Council, and above all my team at the back end, who has supported in an enormous way by bringing in this webinars to all of us and making us more wiser. Friends, don't miss. These are all the education efforts being made by the institutes, and it is an ongoing efforts. Like we have in CP, so this is more than CPs. This is available all the time. CPs are available for 2-3 hours whenever we are there. But these CPs, these webinars, are available all the time. Whenever you want to go, click, just go again, read through, listen again and again, and you can be more wiser and more professional, understanding the equation, what the Accounting Standard Boards and what efforts the Accounting Standard Boards under the leadership of the chairman, CA Pramod Jainji, is doing the wonderful job. In the time to come, more webinars will be coming up. So keep joining these webinars, friends. And again, I'll just put my heartful thanks to all my team, starting from my chairman, vice chairman, my team at the back end, and to all of you who attended in large number. And not to miss, above all, topping on the cake is my expert, Mithulji and Raviji. Thank you very much, friends. Thanks a lot.
Thank you.
Thank you,
for being
sir.
the
Thank you
moderator.
all.
It was pleasure.